All right, welcome back, everybody, to the Additive Snack Podcast. Again, here live at RAPID. This is our third episode from the RAPID show in cold Detroit. And for this episode, I'm really excited to talk about the interface between finance and additive manufacturing with Danny Piper. Danny is the managing partner at NewCap Partners, and therefore the perfect guest to talk about this interface. Danny also has a podcast called Printing Money. Highly recommended. You should check it out. That's where I get all of my information about the latest and greatest financial information around additive, but also I think it gives you a really good pulse on the industry and where the industry is going. So therefore, without any further ado, Danny, welcome to Additive Snack.
Thanks for having me on the show, Fabian. I enjoy your show. I like the format better because it's a little more relaxed, conversational. You can go deeper on topics that we get to do when we're on Printing Money because we're bouncing around all over the place with very limited amounts of time to opine on what's going on a broader perspective. So
yeah, well, you have a lot of in-depth information to cover on your podcast. So I appreciate your format as well. I don't think a lot of people know about NewCap Partners, especially I think our listener base sometimes is more engineering heavy. So if you could explain to us who's NewCap, who's Danny, and what do you guys do?
yeah, no, good question. You're right. We're not a big name. When you think investment banking, you always think about Wall Street, and we're about 6 people.
Okay.
And so we're small. We're distributed across the United States largely, but focus primarily on 2 lines of business. One's mergers and acquisitions. That's sort of the majority of the work we do. And then begrudgingly, we will do some capital raising as well. And I say begrudgingly, we don't typically go out to chase VCs, but what we've done a lot of, particularly in 3D printing, is work with sort of the smaller emerging startups with strategic investors. That's largely been in material-related companies or defense-related companies where there are lots of strategic investors. Medical, we've had investors like Hexcel, Avonic, Solvay, now Science Co., Boeing's, Lockheed's, and the sort. So that's where we tend to focus a lot on the financing side. But our focus in the market is a little bit different, and I kind of think it works well for additive, is that we focus on sort of the emerging technology space as a whole.
Okay.
And so these are companies that are usually under 100 million in revenues. They oftentimes are through a, Series A, Series B round kind of a company, or they're founder-backed companies that didn't have to raise capital. Those are great. They don't have a lot of dilution. And, these are companies that will usually sell somewhere in the neighborhoods of, 20 to 200 million kinds of enterprise values is where we fit. And then you have the big banks in the world that cover all the public companies, and they're trying to do IPOs and others, and we carry all the same licenses, but it's sort of a different distribution model for us. We don't have lots of individual investors sitting in like stock brokers, and I can do private placement and send in $50,000 check kinds of things. So our business doesn't have that distribution model. So we stay very focused on being value added to helping run processes, try to understand sort of the details of what these companies do.
Mm-hmm. And then you say in the emerging technology space, how much of that is manufacturing? Are you guys focused on manufacturing or also in biotech and other sectors?
So for about 3 of us in the firm, we're almost exclusively in advanced manufacturing and materials.
Okay.
And then there's a couple others that touch into some medical, into a few other areas. But I would say 80% of the work I do right now is in 3D printing.
Okay.
And I'll say some adjacencies in advanced manufacturing. So that's the lion's share. And it's sort of evolved that way, a little by design and a little by accident.
Okay.
So
Interesting.
I came across 3D printing probably 2012 timeframe, and I got asked to go present at a conference. Troy Jensen was at Piper Jaffray at the time. They said, we need somebody to sit on stage. He covered Stratasys stocks. And I said, oh my God, I don't even know how to spell 3D printing. What is this going to be? And so I had been involved in a composites company separately I'd invested into. And I was up to my eyeballs in doing material qualifications and how we get first articles built and all the things that you got to do to get a part to market. We were making drone parts and we were making various aerospace parts. And when I sat in and listened to engineers talking for 3 days about the qualification problems of 3D printing, I go, oh my God, this is the composites industry 30 years ago.
Yeah.
And so it seemed to resonate with me from that standpoint. It seems like it's a highly technical area, which I tend to gravitate towards. Lots of fragmented kinds of companies. So it sort of had the ideal characteristics for the types of areas that I think NewCap will be effective in servicing versus sometimes the big banks are just, they're coming in looking for the big companies right away. And everything was growing up and it's still growing up in this industry. So I think we'll talk about, like, since you've been in this industry, how much have you seen change, right? From the adoption curve, just at EOS, right? From prototyping into real manufacturing.
But it also sounds like you dive pretty deep into the technology. Huh? I mean, you're not only focused on the financial health of a company that you invest in or the revenue potential. You mentioned the coupon article inspection. I mean, your job then also really requires to dive super deep into technology, understand the technology to make that financial decision. Is that correct?
Yeah, I think to play where we play, you have to go deeper. Like, if you're going to go cover Stratasys, I don't have to be that technical. I can read reports, I can read sales forecasts, and nobody's going to shoot me. I don't really go talk. I might get some distributors that come talk. But if you're going to cover a company that's doing something, like a company we just sold recently is Fabrisonic. We sold them to United Performance Metals. There's no other company in the world that does ultrasonic welding of metals for additive. Why are they different? How do they work? Where's their value proposition? What types of customers are they going to do? And what are they compared against? What are the types of technologies that they compete against? And so you kind of have to sit back, ask questions, and then figure out, like, the competitive landscape of why a company's going to fit well, where are they going to survive, how are they going to make it? And they're just not easy questions. And so, and frankly, a lot of founders, I think it's helpful for them to sometimes have a person like us come in and just, I can be the person that asks all the dumb questions because I can be the dumbest guy in the room. That's the greatest part of my job. Nobody expects me as the investment banker to walk in and have questions. But when you start peppering these founders with questions about their competitive landscape and why they win, what's the value proposition, and it's not just like the technical, they give me a spec sheet. I'm like, okay, what does that spec sheet mean and why? And that's where the fun part gets to be in the job. And that's where the light bulb goes off for a lot of the technical founders, is trying to translate what they do into meaningful ways that the average investor will go, oh, I think I now understand that. And that's where I think it forces us to really think through, like, every part of what they do and what's the important piece of it, because sometimes it's not always evident.
It probably even helps to force founders to fall out of love with their technology a little bit and see it from a different point of view, I can imagine, huh? Because when I also talk to lots of technology innovators, and sometimes you can tell they are so in love with their product that they don't tend to think about the problem space they're solving, or they're over romanticizing that problem space. Is that something that you see a lot too?
Oh yeah, I call it this way. They know the answer, they just don't know the question, right? So it's like, this is the answer and we've solved it. And it's sort of like, you solved what? And whose problem is it? Let's reframe the question and see where you fit. And I think that's hard, because everybody falls in love with it. If they are passionate about it, then that's a problem too.
That's true.
So,
that's true. Okay, that was really helpful to understand. Now, the financial, really, the whole economic environment right now is somewhat chaotic. There is some light at some tunnels. There is some darkness in others. Obviously, it's April 10th. Right now, we have only 10% tariffs on all countries but China. How do you view those financial turbulences right now for the additive manufacturing space?
I'm torn. I thought, thinking through this, it's extremely disruptive. In a part, I mean, I think there's a couple different games that are being played out overall. So if I take a macro step back for a second,
Mm-hmm.
and I think it's been clear, Scott Bessent has been very vocal that he's trying to do one thing, which is, I think his goal of tariffs is different than, say, Trump's goals and Howard Lutnick, the FTC chairman's goals with tariffs. One guy's trying to get out and drive revenues. I don't think it's going to happen. I think we're going to back off half this stuff. I think it's very problematic for the industries, for companies that have tried to reshore or offshore out of China are getting penalized if they've gone to other places like Thailand or Vietnam or other producing countries. And they're all sitting there going, I don't know what to do. I don't know how to think about it. But I think Scott Bessent's been trying to do this to say, we had $10 trillion in debt that was short-term finance that we had to refinance in this country. And I think he's trying to play a game of, let's create a little dislocation in the markets,
So
have investors drive to safety, drop bonds down. So if that's the game, we're probably playing this for another 4 or 5 months, and then everybody's going to see where the dust settles. So I'm sort of just taking a step back to go, I don't know if I'm smart enough to know the answer. It's been disruptive for sure. And I think it's not helpful for the idea of total uncertainty, because investors, I think, when I think about talking to private equity investors, this is weird to me right now, is I'm busier right now than I have been in the last 2 years. So I think there's an idea this market's coming back. All these fundamental drivers are creating opportunities for everyone to go, we need to rethink supply chains. It's a legacy from COVID, right? And we've all seen the geopolitical issues. So it's creating a storm, but nobody knows how to play it. Nobody knows how to make the investments, because these are long-term investments in manufacturing. So I think there are going to be tailwinds for this industry, but nobody knows where to write checks right now and how quite to do it. So I think additive manufacturing is going to be a little bit of a beneficiary of this over time. And then I have the one curveball, and I'm sitting in RAPID at the EOS booth, and here we're talking about it. And one thing that is clearly evident is the rise in Chinese manufacturers. And so think about what we're talking about right now with the influx of Chinese lower cost providers. So it's sort of this one torn idea, and I don't have an answer, but I got to think right now, EOS is a beneficiary of some of these kinds of ideas. So I'm not sure they're great long-term, but I think we're starting to see the wave in this industry of the newer tools. Think about Bamboo Labs and Farsoon and Bright Laser. There's a trend that we all can't ignore here, and we all should think about, how is it going to affect us? And I'm not usually an advocate or a fan of tariffs. But I think this is going to be something where if there's prolonged tariffs with China, EOS will be a beneficiary for sure.
I could see that.
Which is, to me, it's controversial in a way. Like, it fundamentally doesn't sit with where I normally would sit.
Yeah.
But
you're more of a free markets, let the market play it out kind of guy, I'm guessing.
Typically, right? And let everybody have enough certainty to make investments and make their choices. But we're going to see, I think, a wave and change. You can see the dynamics changing in the halls that formed next the last couple of years, and a RAPID now, sort of, you're starting to see it. And so it's putting pressure on the industry to really rethink about, where's everybody's value proposition? What do we do really well? How do we become best in class at it? And we're all going to have to get better at what we do.
That's a really good point. And you mentioned reshoring, which is not only happening in the US, right? It's also now happening in Europe, mainly due to the new US administration coming in. I mean, Europe announced major defense budgets. So we'll certainly see a stronger reshoring, not just in the US, but also in other markets. And over the past few years, additive has been a beneficiary as well of reshoring measures, right? We see the US Navy trying to leverage additive manufacturing to not really reshore, but to rebuild an industrial base that was eroded. Do you have a similar view that all of these regional reshoring efforts could have a beneficial effect to maybe in general the advanced manufacturing industry and additive as a whole as well?
No, that's a great question. So looking at this year, to your point, from January through, early mid-March, the best performing stocks were Rheinmetall, BAE, like all the European defense contractors.
Yep.
Their boats are starting to float. We're working on a transaction of a metal services provider in Europe right now. And we've been working on it for a while. And it has been dead. It has been so hard. I will tell you, it's weird to me. Germany is the center of the universe for laser powder bed fusion. I mean,
Sure.
it is. Like, I think, everything revolves around Germany.
Yeah.
And having done transactions, all the transactions for Morph 3D, we did a transaction for i3D, and you can see the scale up and how defense has been adopting it and the various applications, space, missiles, suppressors, they're all defense related. And to see Europe is sort of disjointed right now. Oerlikon pulled out of the market, Prodways is pulled out of the market, Beemit's in bankruptcy, and the infrastructure there is, on the services side, I think is ripe to now kind of come back finally, right? I think this wave's going to help. I think it's starting with defense and space is going to help the European defense sector. And that's going to help additive, finally, because I see a lot of these applications. But Europe's funny because the one thing that really kind of makes, I think, this unique is Airbus.
Mm-hmm.
Airbus has two sides to Airbus, right? You have Airbus Defense and Space. And when they have a new material and they want to develop it, they have to go to European suppliers. But if you're Airbus commercial, where do you make the A320? In China. So they're going to Bright Laser. They're doing different qualifications. So you can actually see the same material is going down two paths depending on where it's coming out of Airbus. And so that's what I find interesting right now is sort of, it's just disjointed right now. And so there isn't sort of the same sort of supply chain issues that we've kind of, I think in the US are a little bit more centric and focused of, okay, how do we not have sort of the Chinese manufacturers coming in to go into our supply base, whereas Airbus just truly has a different issue. The biggest market for single-aisle airplanes is in China, and therefore it's a smart move to have manufacturing in China. So I recognize why they do it, but I do think it does create, there's not, as you adopt these technologies, it's not all being concentrated across all of Europe. They're doing a lot of stuff in China too.
Yeah, which is not helping European manufacturers. And I mean, you see the pressure on the European automotive industry. We see the pressure on the European additive manufacturing industry.
Yeah.
Right? And it's not necessarily getting better.
No.
At the moment.
No.
Let's talk a bit about you mentioned the stock market a bit. What's the additive manufacturing stock market look like right now? Is it a buy? Is it keep your hands off?
I'm not allowed to give buy-sell ratings. I don't give financial advice. I need somebody
No
I work for a
financial
broker-dealer
advice.
firm.
Yeah.
I
Yeah.
work now.
Yeah.
You can keep all that in. I work for a broker-dealer firm. So I can't make buy-sell decisions for people, but I think of the overall markets, and I can talk about individual companies and things that I see. I think the whole industry's been depressed. And when I say depressed, I think we're still trying to figure out what's the right operating model for a lot of these companies. And we're still figuring it out. Traditionally, 3D Systems and Stratasys should trade between, 2 to upwards of 5 times revenues. And they're trading at 1 to even below 1 times revenues right now. So they're hitting at all-time lows, right? Yeah. Financially, they've had weaker balance sheets, but that's changing, right? Fortissimo's putting a $120 million investment into Stratasys. That's coming in Q2. Just had some sell-off of assets at 3D Systems, so they're picking up another $120, $130 million in their balance sheets. I think they still have some identity crises of what they really want to be and where their strategies are, so they have some overhead cutting and burn rates to fix. And as they do that, as they make some course corrections, inevitably, I think, all boats are going to start floating again here pretty soon. I have sort of a weird take on where some of these things might go, but I think once they get their balance sheets cleaned up a little bit, and once they sort of get their operating expenses cleaned up a little bit, which they're moving down that path, and they've been working on it hard for the last 2 years.
Mm-hmm.
The one that's going to be the big drag on the industry right now is Nano Dimension, and they had a ton of cash. They just got forced to do the acquisitions of Desktop Metal and Markforged, and all these companies are losing money. So it's going to be important. Whatever happens at Nano is going to affect all the other companies, because the way financial analysts look at these kinds of things and why this is important, we might all go, it doesn't matter, it's different, it's all the same. Somebody sitting in Wall Street who's a brand new MBA analyst is coming and going, one 3D printing company is the same as another, right? They all do the same thing. They just 3D print stuff. And that's like as far as they'll take it. And they go, okay, here's your comp set of companies. So if these companies trade the same way, you're going to have Nano Dimensions valuations sitting next to a Desktop, or sitting next to a 3D Systems and a Stratasys. So it'll always bring down your cohort group when somebody's got a problem, typically.
Gotcha.
And I think that's just for like the generic ones. So the one that's got, and this comes back to your last question, and I go, it really, really bothered me, is the fourth quarter earnings came out in March for Materialize. And Materialize has been the one company that consistently has been growing, consistently has been profitable, and their software business is doing well. It was up. Their medical business was up. And then they have this industrial business, and they bought a company, I think it was AC Tech, back in like 2017, and they've reinvested in the facility. They just opened it up in Q4 because they expanded operations. So they're making a concerted effort of doing exactly what we talked about, reshoring manufacturing in Europe. The market goes, oh, your software's fine. Oh, medical's fine. Guess what? You open this new facility. It's huge CapEx investment. Your margins just dropped. Guess what? We're going to whack you by, you're losing 30% of your value. And you're just like, wait a second. The markets need to take longer term focus and not quarterly. And that killed me. I go, how do you reshore? How do you promote future investments back into Europe and the United States? It doesn't matter. When investors go, I need to see it on a quarterly basis. If you don't give me the results I need right away, I'm going to penalize you. And that blew me away. I was furious when I saw that.
So are we treating manufacturing or advanced manufacturing companies like software companies, where we expect these super fast scalers and growers, and don't have a more natural expectation on what it takes to scale manufacturing? Is that one of the issues?
I think you're hitting it right on. I think, and it starts with the venture capitalists too. Like if we go way back, and how much money went into a small concentration of companies, and the idea that, oh, if you put money in, you're going to change manufacturing as we know it, right? You're going to go hit the button. We're going to 3D print everything. And we all know these are hard problems to solve. And if you're talking about real manufacturing, you got to get through production engineers. And these guys aren't changing at the latest technologies and the coolest, no way. I want to buy not the first unit. Give me like the fifth, or give me the one that's 2 years old that I know the data, how it works, because I don't want my plant going down. So when we think about, and it's a good conversation to have, because I think most everybody still wants to talk about 3D printing as prototyping. But we got to think we're really a subset of manufacturing.
Yeah.
And when you bring that lens to it, it just takes time. And I think VCs didn't get it early on. And I think this is where investors, they love to hear things like robotics and advanced manufacturing, and this is all going to be so revolutionary. And all you got to do is install it, plug it in, and it works. Yeah. And it doesn't. And we all know that that's just not the way it works. It's much harder.
Yeah, and I mean, you even saw the same effects in the automotive industry, right? All the EV startups, the expectations to EV startups, the Rivians, the Lucids, were scale like a software company, scale like a Palantir.
Right.
It doesn't work like that. Manufacturing is really hard. Manufacturing takes time. It takes huge capital, whether it's additive manufacturing or EV.
Right.
The long runway, for sure.
Exactly.
Now, you have an Air Force background. I saw that on your LinkedIn. And therefore, I'm kind of curious to hear your point of view on the Department of Defense's role in the growth of the additive manufacturing industry. It's certainly today already very much coupled. Do you see that? Do you see it as a key driver of additive manufacturing? Or do you believe that there's going to be a more balanced pull towards additive from other industry sectors besides the government?
So I did start my career in the Air Force, but it was 25 years ago, and it was in space systems, and that's where I largely worked. And by the way, where's the first big adopter of additive technology?
Yeah.
Space systems. And I still live right at the hub of where the Air Force, or now it's the Space Force, does all their acquisitions of major systems. So I feel fortunate, and that's one of the things I feel relevant. I live in Hermosa Beach, great place. I'm 10 minutes away from where sort of the epicenter of all this stuff is. And it does shape how we do things. If you look at the DoD, not just as a customer, because sometimes they're a really hard customer to get, and they take a long time, and they're finicky, and they kill companies because we ramp up on some R&D, and then you have to wait a long time. And so you have these valleys, and they're hard to have continuity that you get in sort of commercial, more linear type markets. So, but they're super important. And I think most of like the laser powder bed fusion market for services today, again, it's missile systems, it's space systems, it's suppressor systems, it is DoD that is driving a lot of it, and it'll continue. They've also been big investors in two ways. One is they have lots of grant programs, and we call them SBIR, Small Business Innovator Research Grants. And then the defense contractors themselves, Boeing, Lockheed, Raytheon, all have investment arms. Yeah. And they've been active players in helping a number of 3D printing companies. I'm not sure that wave will continue on the investment side. I don't think they've gotten really good returns in a way. But the way they measure some of their returns is, does it actually deliver a more capable product on their back end? So I don't think they're going to go away from it, but I think there was exuberance on 3D printing over 2012 to say 2021, and the last few years, I think these funds are going, ooh, these are the harder ones to do. So you got to have, if you're going to approach those, if you're a founder and you want to go there, you really need to develop relationships with those companies and get them to understand the value proposition well before the investment people will get excited about it. But it is a necessity. And I think one of the things that we're retooling and we're trying to figure out from a national strategy is, and this is a weird concept. I don't know, it hit me like on stage at AM Strategies back in February, and I never thought of it before, but we've historically, the U.S. builds massive, expensive weapon systems, whether it's, Joint Strike Fighters and massive satellites, but the world's moving to smaller unmanned systems. Yeah. And so there was this thing that Elon Musk said to the cadets at West Point that resonated with me. It's a really simple formula when you look at it with unmanned systems. It's how many do you have and what's their kill ratio versus how many they have. So if you have a system that's twice as good as adversary systems and you have 1,000 and they have 10,000, you're screwed. So if you think about how important is manufacturing now in this, it's that how do you make those? Because it's not like we can always be 10 times or 100 times better. That's going to start to go away. So if Europe and the United States don't start thinking about manufacturing systems as weapon systems, we're screwed, right? I think that's sort of where you have to go. Manufacturing is where it's at, and our ability to integrate and go faster. When the DoD wakes up and really starts going down this path, which they are, you can see it in shipbuilding right now, but I think it's going to be all systems. I think we're going to get a stronger emphasis on how do we accelerate this. The problem is going to be who finances it. You? So here's why I say that. We just talked about the materialized solution. Yeah. Public company investors don't have a tolerance for things that don't give you a yield in 2 quarter, 3 quarters yet. They don't have a 5-year horizon. That's true. Private equity, which is, there's a huge proportion of defense contractors and the suppliers underneath them have been bought by private equity groups. Private equity groups, for those that don't know, the way their business operating model works is they buy cash flows. Yes, there's a company behind it, but they buy cash flows and they lever them up, right? And so when you do that, you typically hold companies, they raise funds and they have a fund for like 10 years, okay? But it takes 2-3 years to deploy those funds. Then you can hold those companies for up to 5 years. And then you got to start selling them so you can return the capital to your investors. And they're supposed to be smart investors, right? So they've got about a 5-year window. What makes it really hard for them to adopt newer technologies is I need to get a return on that investment in probably 2 years or 3 years. Do you get a return on starting and bringing in and integrating a new automation system that hasn't ever been done, or a new robotic system, or new additive systems in 1, 2, 3 years? You don't. So what most of these people do is they go, we're only going to own this for 5 years. I'm going to kick the can down the road for the next buyer to go deal with this. So the types of capital that we need in this country, and I think in Europe too, is a different kind of capital. We need 20-year funds. We need people with longer horizons that are innovative, that can go longer. Because right now, I don't see it enough. And I know there's a couple anecdotal data points, like you can take SpaceX.
Yeah.
Phenomenally good, incredibly successful. What they've done is absolutely mind-blowing. But they build a product and they kind of control that product. For manufacturers and manufacturing systems, they're oftentimes suppliers and they don't control those end markets. So for them to make the same kinds of investments gets to be harder. And that's where I think we have to rethink the whole problem of how we finance manufacturing companies.
That's very interesting. I mean, typically, that's where also government steps in, right? In these super long-term investments. I mean, government or wealthy private individuals, if you look at nuclear fusion, for example, I mean, that's either government funded or funded by very wealthy individuals, really not much in between.
Right. Yeah. There's a gap in the market, how to fund it. Family offices, like, and these wealthy individuals can certainly play in some space, but it's unfortunate. I think the government, I know there's talk about a sovereign wealth fund in the United States coming in board. And I see two scenarios there. I would like to see the rose-colored glasses. We understand what our strategic priorities are. We're going to go, and we're not looking at the biggest return, but if we can get big returns because we can go invest in making these companies sort of transition to the next generation, cool. What I see happening is a bunch of ex-Wall Street guys showing up going, all right, we can sell TikTok. We're going to get a piece of that. And then what we're going to do, we can get a quick turn on this one. And they're going to run it to get returns. And we're going to be just like everybody else. And so we'll see how this one plays out.
Maybe Social Security. That's a long-term.
Yeah, right.
Yeah. Okay. I have a couple more questions for you. So one is, it kind of dawned on me earlier while you were speaking that you have a very good and unique view and understanding of the additive contract manufacturer landscape. And if I think about it a bit more, it's actually very positively surprising that the big scalers now in additive, except for a few OEMs, have been those contract manufacturers where we now see 20, 30 machines installed. A, why do you think that is? And B, do you see that trend continuing where you don't have existing large manufacturing houses pick up those types of contracts, but very specialized companies in additive that scale like that?
The way I think of this one, it's an interesting question. The companies that are at that stage, think Encodema, think i3D, think Centavia. There was more 3D back in the time. In these kinds of companies, they all started 2012, 2013, 2014 timeframe, right? They were this first vintage. And they had to pay their dues of how do we get repeatability on machines? Oh my God, N400 comes out. What do you do about stitch zones in between the lasers? And how do you even qualify a part? And they grew slowly. They were all sub 10 million in revenues in 2020, right? I mean, in the first 7-8 years, they're just grinding it out, doing the hard work. And it's nice, by the way, to see Encodema's got 35 machines now. i3D's got 36 machines now on the ground. And it was the hard work that led to these kinds of contracts.
Yeah.
I think the defense primes, they all want some internal capabilities, but they need a supply chain base, and they were the first ones to go in. It's getting harder for new entrants to come in.
Mm-hmm.
So I think it's going to get harder and harder for players to really come at this. So I think when you look at sort of where this is going, I think there's two models that are occurring, and look at it on the US side of it, is that you've got the pure play sort of Encodamas and i3Ds, which one nice thing is this, and this is why it's going to be hard to compete with them. You have efficiencies in your organization to have high utilization of machines. I have my own service techs now. I work with EOS directly. So I've got trained people, because when you only have 1, 2 machines, 3 machines, machine goes down, you're calling EOS. Service techs are hard to get. The service time, you might have a machine down for 2 weeks. You've got an asset that is down for 2 weeks. How do you get a big return? So I think they have operating efficiencies, one, that matter. And then 2, they have scale and capital behind them now enough to really, like, they've hit critical mass, they're profitable, and they've done well. The second model, I think, is, by the way, equally fascinating, and I give a lot of credit. This was like an outlier, is Adman in the US. It's a totally different business model. So somebody came up at IMTS and said, is Adman going to take over the world in the service bureau market? And I'm like, no, they have a completely different business. So they have some EOS machines, they have some concept laser machines, they have a bellow machine, they also have a large number of polymer machines. And if you want to go do science projects and develop and do innovative stuff, they're great to go with, but their DNA started differently. So when you think about private equity, so they're owned by American Industrial Partners. And American Industrial Partners basically said, what are we going to do about additive? If I stick it in my portfolio, let's say Ascent Aero, which makes large tools for the aircraft market, defense market. So how is tooling going to get shifted? If I go do $5 million worth of R&D work, that means I take $5 million out of that business, right? From a cash flow perspective.
Mm-hmm.
Their valuation perspective goes, okay, so if my EBITDA dropped by $5 million, and I'm worth 10 times EBITDA, I just lost $50 million by doing that, right? That's the math. And so they go, well, why do we do that? So they park and created a company called Adman, take somebody like Ascent Aero, and not that it was $5 million, and they say, okay, project number 1, go look at large format printers. And they go out, they do a bunch of research, they start prints, they buy a Thermowood machine, and then off to the races. That keeps the expense into Adman and off of Ascent Aero, which is sort of a brilliant move. So the first thought is they service all of the companies that they own with this entity. Then they start getting critical mass and they start going, hey, wait a second, we can do this for anybody. And now they're building a business around it in a different way. So they're two different business models, but they have different DNA and they're both starting to work. So that's where I think it's kind of cool. I think there's going to be new upstarts that'll work in certain areas. Like one of the big ones now is sort of DED, what's happening in wire-based DED systems and even powder-based DED systems. This is sort of like where I think in 2012 to 2015, laser powder bed fusion, I feel like DED is there right now. Like, how do we start to bring these technologies in? Because that's coming and we can all start to see it. So it's fun to watch some of those kind of upstarts because they're just kind of coming into that market.
And I could imagine that time frame of 7 to 10 years of grinding could get a bit more compressed because you learn from previous attempts in powder bed fusion. There's newer tools and standards out there that can help in the compression of that time frame.
Yeah.
So there's certainly potential for faster growth there.
Yeah. I think so too. And so that's a fun one. And there's a few other little markets that are just going to start to emerge. And you can see it also with traditional manufacturers. I think, that historically haven't gone into, like when we sold i3D, we sold it to a private equity group that just bought a large machining business and they didn't have us attractive, but they had a very smart, forward-thinking CEO who said, 50% of a part's post-machining in terms of the value proposition. Additive and machining actually have complementary assets. So they did that via an acquisition to put those two together. I think you're seeing more manufacturers start to look at how do I enter this market? And so I think you're going to see more of this just inherently being adopted more slowly because these pathfinders like Encodement i3D started that process and others are starting to follow. But I also think that it's harder for machining companies to go into additive than it is for additive companies to go into machining. Because I think just the whole DNA of qualifications on building materials, right? You don't have that material expertise in machining shops because everybody knows where an ingot comes from and we're pretty good at understanding that. Now we just need to make sure the geometry is right. You've got all these other disciplines you got to understand in additive. That makes it harder for them to go downstream. So they're going to move more slowly. But for the pure play additive people that have made it through the hump, I think they've got a bright future. I think it's hard to get started, but there's a lot of small players that their expertise will be valued over time, especially as things start to ramp up.
Okay. Speaking of ramp up, so what's your crystal ball projection? We've now talked about there's a handful of challenges for additive to scale up faster. One is the financing gap that you mentioned earlier. On the other hand, the technology is continuously evolving. I think barriers of entry are continuously dropping lower and lower. Right? We don't need to train engineers for 2 years anymore. I think we can now get somebody ramped up somewhat quickly, also with innovative tools like 1000 Kelvin, like interspectral. I can help the qualification time frame to go a bit shorter. So therefore, there's various aspects to the future growth of additive that's I'm curious to hear your thoughts on. Where's the industry going? What's your projection?
Yeah, I'm more bullish now than I have been in a long time.
Okay.
And I'll just lay out something that who knows if it comes true, who knows how this all works. But if you want to pontificate with a crystal ball, in 2013, 2014, we had this peak in the market. 3D Systems was trading at like 5-6 times revenues. Everybody's going to have a 3D printer in everybody's home, and this is going to be awesome. And it didn't happen, and the whole market sort of crashed. And then we crawled our way out, and we started really getting momentum with traction. Laser powder bed fusion started taking off. And like 2018, Honeywell came out. It was like, we've got this program. We're going to need 100 printers. By the way, they never printed a single part. But running around Formnext like, oh, that's $1 billion worth of orders coming in. But things actually started growing. They did grow. And then all of a sudden COVID hits and we have this supply chain disruption. And now all of a sudden the market gets frothy. We're going to solve supply chain problems. And then we had this massive crash. We didn't solve all the supply chain problems. So it goes about 7 years or so in this cycle. Yeah. And we go from like this peak and the people in 2014 weren't around in 2021. So now all of a sudden you had a lot of people get fired off Wall Street, markets downsized, M&A's been down hard for the last 3 years. Investments have been down, IPO markets, all that's been down, lots of turnover. So now you bring up 1000 Kelvin, or I'll bring up a few more. You can see a pattern emerging, right? At least it seems logical that this pattern emerges. Like, it takes about 7-8 years, we hit a peak in the market. So I'm like, what's going to happen between 2021 and say 2028, 2029? Is something going to change, right? That says, oh, we're going to hit another peak. It's not a supply chain one this time. It's not going to be a printer in every home. We've already sold those stories. But I do think we're going to adopt manufacturing and we are going to grow. We're not going to grow and spike, but Wall Street won't know that because they're going to see 1000 Kelvin comes in and they solve a problem or two. I think they're going to make some things like the friction of adopting additive gets easier. And so you're starting to see smart money coming back in, and AI is going to be a leader in some of this. And all of a sudden, it's going to get way overhyped, by the way. There's going to be more dumb stuff, but it's not going to happen right now. We're bouncing around the bottom this year. Yeah. Until we get through some of the problems with nano dimension and getting that cleared out, you're going to slowly see everybody's going to start hitting their stride again. Smart money's coming in. Look at Fortissimo's already investing in Stratasys. It's already happening. Smart money's moving in. And then you start to see some weird things that happen. And it was like, Backflip raises $30 million on a seed round deal at like a $75 million pre-money valuation because they have a text to CAD sort of new program. You're like, $30 million on a 75. This is like the heyday all over again. So you go, there's an early indicator right here. right? And that, by the way, we might see faster adoption of things going through the design process, right? AI could help with some of these,
Yeah.
or the number of engineers, how we train them, and so I can see where we're going to be beneficiaries of this, but I see it getting hyped. I see it getting way overhyped, right? Because we're only going to go at the rate we can go. It's just the way it always works. But all of a sudden, VCs are going to start climbing in because they're going to see a couple. And then all of a sudden, new analysts are showing up in Wall Street going, oh, you guys haven't seen AI before in manufacturing. This is all new. And so I sort of have the thesis that the window for, smart money's coming in 2026. And then you're going to start to see later 26 and 27, sort of a little bit more of that risk off, like, hey, we don't care. This is going to be awesome. And it's the people that they're not as sophisticated, right? And those investors are going to start rolling back in, and then things are going to get frothy. So I think from money flowing into this industry, it's coming back. You can already see it. I'm busy, I am busier than I've been in the last 2 years. Good. And you're going to see this pattern emerge. I hope it doesn't get super frothy where we have big crashes. It would be nice if we could just follow sort of a more reasonable line, but I just don't think that's just the way the market's like it. So I'm bullish. I'm telling everybody, just hold on to your seats. It's going to be a little bumpy ride this year still, but you can see the growth opportunities emerging, right? The dynamics for reshoring, the idea of taking friction away with things like 1,000 Kelvin and AI and Euler, and there's a bunch of these kinds of companies that are kind of coming in with tools that help everybody get through some of the roadblocks that we've had. There will be one solution that's a silver bullet for any of these things, but it's a combination of a lot of things. And I think that's where we're going to see more adoption faster. And I think the tempo with DoD also needing to have better manufacturing solutions. We're all going to see the tailwinds are going to start kind of coming in. It doesn't feel that way. I know there's a lot of people who are like, oh God, it's still so horrible out there. And I'm like, I don't think so, everybody. I think that was me in 2022 talking. Now I'm like, this is going to be good.
Yeah.
So
probably depends on which seat you're in. If you're a small, struggling startup, you probably don't see the tailwinds yet. I think if you're a large contract manufacturer with a good pipeline, you're certainly a bit more optimistic about the future. And I hope that it's somewhere in between of what you said, right? That we don't enter the next hype curve. Maybe AI can even help us to become more boring, right? To become more reliable and just become this one of the manufacturing technologies that nobody really cares about, but it works, right? And that would actually be the best outcome.
That would be the best outcome, but
you think that?
Oh, come on. It's sexy. People still like it. Oh my gosh, right?
That's true. Yeah.
Look at what you're printing now. So it's.
Maybe I'm underestimating the sexiness of additive. To me, it's, being in here for 10 years now, we hear about it every day. So we kind of think everybody knows about it, but I think it's actually still a fraction of people. So there is potential for the next hype.
There's people that go, oh, you can print metal? And you're like, oh my God, right? And that's what we were dealing with when you get to that later stages, is like, they're going to see more of these press releases and news and articles and, oh my gosh, we're 3D printing drones now. And I think it's just inevitably going to drive these animal spares. And the companies in this industry are going to push it because their valuations will go up.
Sure.
Right? Sure. They're going to want it. And that's why it's not just that people don't understand it. They're going to be sold this by the companies in here because it's going to work in their favor. It's going to attract cheaper capital for them. And that's why it's just going to happen.
Cool. Well, it means good stories for the Additive Snack podcast in the future. It means good stories for the Printing Money podcast in the future. It means you stay busy. It means I stay busy. So nothing too bad about it.
Well, good. Well, thanks for having me. I really appreciate it.
Thanks for stopping by. It was awesome to have you on the show, Danny. And as I just mentioned, if you want to check out Danny's podcast, Printing Money, please do subscribe to his podcast, subscribe to the Additive Snack podcast. We'll be back next week again with another set of great guests, and I will see you next time.